All right, traders, so let's talk about the 90% landmine. So I definitely stepped on this many, many years ago, probably 15 years ago now, when I used to trade a momentum strategy, which was awesome, but um, was not aware of this potential. So I just didn't think about it, and I actually didn't really have a good trading plan or good risk management plan back then, but I was still making money in the market and didn't really feel like I needed one, I guess. So I ended up having this situation happen to me. So I wanted to share it with you. So it basically goes like this. So was on a hot streak. It was definitely on a good hot streak, but we're gonna average, just for simple math. I'm just gonna give you round numbers. So my first trade made $100. Second trade made $100. Third trade made $100. Fourth trade made $100, and kept on going like that. 100, 100, 100, 100, 100. So ninth trade made $100 roughly. I was actually making, a little less, a little more, but to just keep it simple. So yeah, when you're on a hot streak like that, you're on a hot streak. And basically, I was just going, all in on my account. Whatever my hockey, basically, just saying, not even a hockey back then, is my calculator letting me know my share size is, and then just going all in. So buy whatever I can afford at the time. So I was trading, stocks that had a wide range of price from $5 to maybe $15, somewhere in there. So some trades I made a little more, some I made a little less, because like you can have a $5 stock that moves 50 cents, and you can have a $15 stock that only moves 10 to 15 cents. So obviously you're going to lose more on the $5 stock if you're just maxing out your account than you would on the $15 stock if you maxed out your account and only moved 10 cents, because you have less shares and it's also moving a smaller amount, right? So then this is what happens. This is what happens. You go from making $900 and being really excited to dropping $3,000. You had a 90% win rate, and you basically blew up your account. Gave away all these gains, probably the gains from the several weeks before that. And one more day like this, and your account is over. Or one more week like this, I should say. You could have 2 weeks that are 90%ers, and your account could be gone. So that's basically what happened to me. I ended up with a $4 or $5 stock is what I bought it at. And the second I hit the buy button, it went straight to $4 instantly. Like you couldn't, if I was using hotkeys back then, there's no way I could even get to a hotkey. Like it just happened instantly. And then it stopped for a second. I was like, well, it just happened. So I put a stop in below that, and seeing, well, maybe it's a spike and it'll recover. And it didn't. I got my stop in, and then it dropped like another 50 cents, but I didn't feel that. I only lost out like a few pennies at that point. But still, it's $1. So this is how it works. Let me bring this down. All right. So if you're buying $10 stocks, and the average move of those stocks is around 10 cents, and you can afford 1,000 shares of those stocks. Let's say you're maxing out your account. So you're winning or losing. This is provided you have a 1-to-1 strategy and a 90% winning strategy, right? If this was like a 60% winner and this happened to you, oh man, it's game over for you. So $10 stock, 10 cent move, 1,000 shares, $100. Win or lose, $100 roughly. And then you jump into a $5 stock that drops $1 or $1.50 on you. Because it's a $5 stock, you could afford 2,000 shares. So $1.50 fail on 2,000 shares, it's a $3,000 loss. That is a huge loss. And this happens all the time to traders. They say the majority of traders lose money. And I've seen this happen to myself. I've seen it happen to people I know. I've seen it happen to other people on YouTube. Like this happens all the time where traders are just killing it. They're making $1,000, they're making $2,000, $500, and all of a sudden $8,000 loss, $6,000 loss. Why does that happen? So this 90% landmine, you have a 90% success, you're feeling confident, you're going all in, and you're just cruising along. Does that make you slip up a little bit? Maybe you deviated from your risk management plan. Maybe you don't have a risk management plan because you didn't think you needed one because you're killing it and you don't have one. So why should I get one now? Maybe you don't have a trade plan that kind of like protects you from this. So, or maybe your strategy is just, all in all the time, doesn't matter what's going on, and that's been working until this day gets you. But the biggest reason why this happens, and the biggest way you can protect yourself from this happening, is to have a solid risk management setup and a trade plan. And in that plan and in that risk management setup has to be rules around scaling. How many shares do you buy of what stocks? Print it out, put it on your wall, put it somewhere so it's easy to access. Like when I was trading my momentum strategies after that occurred to me, I went and put together a form that said, a $10 stock, I'm only buying 300 shares. A $5 stock, I'm only buying 100 shares, and so forth. So whatever it was, I basically put limits on all the shares based on the price size and the movement size. So I had a little like graph. I would look down, $5 stock, 25-cent risk potential. This is what I'm gonna buy in at. I'm gonna reduce my share size. Now, yeah, that same drop could have still happened potentially because I was trading momentum strategies, which I no longer trade anymore just for that exact volatile reason. Low float stocks that can move so crazy. I don't trade those anymore as another part of my risk management strategy to protect against this kind of thing. But the difference is if I am doing a constant win-loss ratio, whether it's a $10 stock or a $5 stock, I've got my account priced to where I'm always doing around $100, somewhere in there. Then when I do go to a lower stock where I can afford more shares, I'm not taking it. So if I was doing that, and I'm saying $100 here, so $10 stock, 1,000 shares, $100. Now a $5 stock, let's say I thought my move was only going to be 10 cents, and I was going to get surprised, and I was looking at $100 win loss. So if the $5 stock looked like it was only going to move, 10 cents was the movement on it, then I buy 1,000 shares because it's a 10-cent movement. I don't buy 2,000 because I can afford it. I just bought the 1,000. Or if the $5 stock looked like it was a 25-cent mover, then I would have only bought 400 shares of it. So, and if it looked like it was a 25-cent mover at 400 shares and it dropped $1, $1.50, then I lose $600. I'm still green on the week, So it all depends on how, you kind of have to look at your risk management plan and your scaling plan and see at what point do you scale up. Maybe this whole week you're hot, so you're trading a small amount, but you're like, man, I'm just on fire. I'm going to scale up. I'm going all in. Boom. Right there, that happens to you. So just something to think about. I know like with my risk management plans, I have to look at my trading strategy, my system, my success rate, all the different variables that go into it. Like with my students, we go over all the different variables of the trading plan, the strategy, and the algorithm, and how it works and all that stuff. And then all that information goes into a trading plan, when to scale up, how many shares should I be buying of this stock, because I don't want to have this happen to me. I don't want to have a whole bunch of green days to give it all back with one red day. I want to have a bunch of green days and only give a piece of it back with a red day, or maybe I swap one for one kind of thing, or maybe at worst my red day takes away 2 of my green days. And if you have an 80 to 90% strategy, then it doesn't really hurt that bad. If you have a 60% strategy, you're basically going under. Your account's going to blow up. So if you haven't looked at my 60 to 70% win rate, good or bad, definitely check out that video, and then couple that information with the idea of this. And then go back and look at your trade plan and ask yourself, with the 60 to 70% video and this one, and ask yourself, are you at risk of blowing up your account? Because you can have 9 winning days and give it all back on 1 losing day. Or what's your account success rate? Is it a 70% or 60%? Then what does that 1 losing day look like if you go from a stock that's expensive where you can't get that many shares to a cheap stock where you can get a whole bunch of shares and it's moving a lot more than the expensive stock? If your risk is $1 risk compared to that 10-cent stock or that $10 stock where you had a 10-cent risk, should you buy the 2,000 shares and risk $2,000 when you're only making $100 a trade over here? So all my trades, I know what my risk is when I get into the trade. I know how much money I'm going to make when I'm in, and I know how much money I'm going to make if I lose. So I know exactly those numbers, and those numbers go right in. And with the Dash Trader program, like trading momentum stocks and things like that, I can put a stop that activates the second my trade executes. So the second my trade is bought, my stop can be in. So now when I'm trading like momentum stocks, if I do trade any, which will be very occasional based on news or something crazy happening, I'll put my stop in so that on Dash Trader, as soon as I enter, and same thing with Thinkorswim, as soon as I enter, my stop automatically goes in with my trade. so that I can't get surprised and I'm only risking what I want to risk. Granted, stocks can gap and you can still get caught in a gap, right? But, at least I have something there. So something to think about. But if you know your risk is going to be $1 or $1.50 on this $5 stock, and you've only in your other, if you all these are known variables, which a lot of traders know what these variables are, but they just max out their account the whole time. So in that case, you're willing to make or lose $100 here. That's why you got your 900. But then you were willing to lose $2,000 on one trade or $3,000 on one trade, and just blow up your account. So don't hit the 90% landmine like I did a very long time ago by having an awesome win streak and then going all in on a cheap stock that has a huge potential of movement, and then you just blew it all away. So try not to make that mistake. Look at your risk management plan. Look at your trading strategy. Watch my videos, 60 to 70% win rate, good or bad. Couple that with this idea, and then revisit what you're doing to make sure that you're protecting yourself. All right, traders, have an awesome day. We'll see you on the next lesson.